Hey, what's up everyone? So in today's video, we're about to discuss some top-down analysis tips, the process that I employ, and I have it separated up into 3 separate categories and perspectives. So you're going to want to stick around to the end of the video to get all the gems I'm about to lay in your hands. But yeah, so without further ado, let's jump right into the video. All right, so of course, the first thing you're going to want to do is look at the news. So, you'd look at the news, figure out what's happening throughout the week, where the red, high impact or medium impact news drivers are at. Because as ICT has taught before, this is how you can basically schedule out the best times to trade or to consider looking for potential opportunities. Because as traders, we need volatility. So the volatility comes in the form of volatility injections. And those volatility injections are basically derived from the economic calendar. So as you can see, we have CPI, right, and a bunch of things. But what's on this right now is not very important. I just wanted to make sure that you understood that that's the first place you want to start when you're going to start doing your top-down analysis. So in terms of the top-down analysis process, I have separated it into 3 separate perspectives from time frame to time frame, in a fairly repeatable, easy to apply process, at least in my opinion. So the first thing you want to do is start from the monthly, weekly, daily. Why? Because the higher time frame is what the lower time frame is going to be working inside of. Okay, these are called parent time frames. These higher time frames and the PD arrays and the ranges and different things associated with the higher time frame perspective is going to be dramatically important when you're looking for when you're looking for lower time frame, high probability, dynamic price delivery. Okay, the dynamic price delivery comes from these higher time frame levels and PD arrays, and something to also consider when you're looking for a specific higher time frame move to deliver. You're going to want to look at the economic calendar, because if you're going back to this, the economic calendar generally shows you when specific higher time frame moves could end up taking place. That's a huge gem that maybe went over your guys' head, but do some back testing. Figure out, side by side, what news events occurred at what day, at what time, and then transpose that into the higher time frame charts, and you'll see that this is, that the economic calendar holds a lot of importance when you're looking for timing higher time frame directional moves. So just something to consider. The first thing, like I said, was the news. Then you're going to want to look for higher time frame PD arrays on the monthly, weekly, and daily. Right, so some liquidity to note as you're doing your top-down analysis has to do with the previous week's high, previous week's low, previous day's high, previous day's low. And in terms of more near-term liquidity, you can also utilize, as ICT has taught, the previous 3 days highs and lows as well, because those are also hold near-term significance when it comes to liquidity. All right, so to find these levels, the previous week's high, previous week's low, previous day high, previous day's low, and the previous 3 days highs and lows from the daily perspective, well, the first thing you want to do for the previous week's highs and lows, you go to the weekly chart, okay? And then you look, where's the weekly high, where's the weekly low, right? And then you would want to mark that off, right? You do something like this, okay? You look at the previous week's high, and you look at the previous week's low. Okay, and preferably you're going to want to label these things because, it's just obviously self-explanatory, right? You're going to want to be able to know what's what when you switch down to the lower time frames. And then also, all right, we're just going to work with one chart here. Let's just work with the S&P for now. So we'll also label out, like I said, the PD arrays. And what's the most near-term PD array? That would be this monthly FVG. Okay, so let's make that purple. You could use whatever color. You don't got to use the same colors I use. Oh wait, whoops. Previous month high and month high and month low. Okay, so I hope that this right here was pretty self-explanatory, because a lot of people are like, how do I find previous day's highs and previous day's lows and the liquidity that we're going to mention? Well, the time frames are very helpful in terms of, at least this specific aspect, because you could just find the monthly candle, find the high and low, and those are significant. Here's a previous month's low, previous month's high, right? So it's visually easy to see where these levels are at. And when price gets close to them, they become significant. Like if price got down to here, right, and started attempting to attack this low, digging into this wick, it would be reasonable for it to try to reach down into a fair value gap that's resting right below it, because this is a previous month's low. So as far as this is concerned, this would be, in my opinion, all we would have to label for the monthly perspective in terms of what we're looking at currently. So the next thing would be, let's drop down to the weekly chart, and we see that those levels are all transposed. So even more significant with this previous month's low here, we can also see as we transpose to this weekly chart, we can now see that there's equal lows resting right above a monthly bullish fair value gap. So mind you, price doesn't just go in one direction, right? Price drops down to go higher, or it goes higher to go lower, right? And in this case, if we were going to be bullish, ideally, I would like to preferably see price dig down into the sell side here and then rally up, because that's liquidity. These are previous week's candles now. So with this being the previous month's low, we can also see it's in confluence with the previous week's candle, and the high and low of that previous week also has the liquidity above the previous week's high, previous week's low. This is another previous week's candle, the previous week's high, and previous week's low. We can see that the previous candle pierced that previous week's high, right? And if the weeks are going to be bullish, like in this case, if price is going to, like say we start here at this candle and it drops lower, if the candle is going to continue to be bullish for the week, meaning the weekly bias would have been bullish, the previous week, if that hasn't been taken, is likely to be attacked, right? So you could see previous week's high taken, right? Same with here. When price opened up, it dropped lower. The week ended up attacking the previous week's high, okay? And then same over here, right? You could see previous week's high was here. Price opened here, dropped lower. Remember, power 3, and then price ended up rallying, attacking the previous week's high. So you can see the significance in terms of, what this can bring you in terms of navigation skills when you identify these specific levels and do this process. But yeah, so we went from the monthly, we found the previous month's high, previous month's low. We found the near-term PDA rate, which is a discount fair value gap, which is a bullish fair value gap. So that's potentially a target if price is going to turn around. Once you transpose to this weekly chart, now you have an opportunity to identify the previous week's highs and previous week's lows, right? The most near-term previous week's highs and previous week's lows are generally going to be the near-term liquidity, because if price is going to be bearish and retrace, it's going to have to most likely attack, well, it doesn't have to, but it will ideally attack the previous week's liquidity, which is at the previous week's low. And it's even more high probability when you're able to label or match something like this, like a fair value gap below, or a order block below, or some type of logical discount array that price can basically reach for, and you can pair that liquidity with, right? So we've now knocked out the previous month's liquidity. Previous week's liquidity is basically in alignment with that, so we don't have to mess with the labeling and make it too blurry or too busy. So we can you could clearly see how you would go about labeling the previous week's liquidity as well as the previous month's liquidity, because those are like the first little steps. All right, and then once you have identified what you can see on the weekly chart near term, then we can actually drop down to the daily and see what levels can be transposed on the daily time frame as well. All right, so now we can see the previous day's highs and lows. We can also see how that is in confluence with the previous week's liquidity. So now from that monthly fair value gap, right, in the monthly low, we can actually see the daily significant levels. And in this case, the significant level for the daily in terms of PD arrays, we see there's an order block here. Once price closes below that midpoint of the order block, that would, in my opinion, confirm that this monthly fair value gap would then get really reached into, and then the sell side would want to be attacked. Okay, that's kind of like framing out a narrative. This process, basically what we've done so far is just basically mapping out liquidity, like basically painting a picture of the battlefield that we're about to participate in, right? So we've went from the previous month, previous week, and previous days now. Okay, so now this perspective gives us a pretty good idea in terms of what we could potentially expect, at least from a top-down analysis process based on just this chart. Of course, there's intermarket relationships and stuff as well, and fundamentals, but this right here is a very important aspect of things, because if you don't know what the hell could be possibly significant, then you're just going to struggle, and it's avoidable. You know what I mean? It's at least easily managed when you actually have an understanding of how to navigate, because that's pretty much what this is navigating and plotting the possible liquidity that price could potentially want to utilize and be used in your framework. Okay, so now we can see, remember, the previous day's high, previous day's low, previous week's high, previous week's low, and then I didn't add the previous month's highs and lows, but just assume that it's there, because I just basically forgot to place it. All right, but now we can also now utilize the previous 3 days highs and lows. Something you want to consider also in terms of liquidity that's important when you start a week has to do with the previous Friday's highs and lows. So if it's Monday, for example, you want to observe what happened on Friday, find the high and low of last week. In this case, the high and low of Friday would be right here, because this would be the Friday, right? You could see that showing here at the bottom of the screen. So what happened when Sunday opened? Sunday attacked Friday's low, right? Dug into this order block as well. We also have an inversion fair value gap, right? So if price was to break through the midpoint of this order block and close and get below this inversion fair value gap, it would likely be used as an inversion to push us lower into here. Whether that is going to sustain a down move is not basically what would be seen or utilized perspective-wise, because I wouldn't change anything. We already have this fair value gap here just waiting to be tapped into in a bullish market, and no sentiment has changed essentially. So it's just been, bullish PD arrays have been getting respected, fair value gaps have been respected, bullish order block, volume imbalances, right? New week opening gaps have also been used as support, right? And then accelerated. We got another one here that wasn't really reached into, but nonetheless, that gets down into one of the other piece of information, which has to do with what PD arrays in terms of institutional order flow are being respected or negated. In this case, bullish PD arrays we can see have been respected. So in terms of bias, it would be continuously reaching higher, meaning that previous week's high would end up getting attacked. We could see on this daily chart, these gray areas are new weeks, okay, the start of a new week. So this new week dropped lower to then get attacked, going into the week after this one, right? But nonetheless, previous week's highs and lows sometimes take a little bit of time to be attacked, and previous, month's highs especially, highs and lows tend to take a little while. But nonetheless, it's good to have those marked off so you can know when we're getting close to one of those levels, because generally those levels, when they get attacked, have a lot of volume behind them because they're higher time frame, larger liquidity pools. So, they like to get to those areas quickly. Again, you would want to look at your PD arrays. You'd want to look at the current range using the most near-term fractal low and most near-term fractal high. So then you'd be able to measure from this low to that high, or you could use this one to that high because this took out liquidity here, right? So sell side was taken, buy side was taken. So then that becomes your dealing range, right? And then, basically price worked within that and has continued to push higher. So again, you also want to look at, so that right there was your basically premium and discount navigation. When sell side's taken and buy side's taken, that creates a dealing range. So in terms of this, when sell side was taken here, buy side was taken here, from this low to that high, that became a dealing range, right? And then you can also utilize from this low to that high, or actually this low to that high. And then you can also see how that had its own premium discount range as well, right? So if you just measure this out here, right, you could see discount, optimal trade entry, right? You could see how from this low to this high, right? So that was also dug down into a discount. You can also see from this low here to this high, if none of this occurred, price didn't want to get down to a discount. Why didn't it want to get down to a discount? Because we had a fair value gap here that price utilized, took liquidity, and it's been super acceleration higher, which in my opinion is artificial, but that's besides the point. But yeah, so in terms of the higher time frame analysis, that's pretty much what you'd want to utilize it for, right? You'd want to be able to observe what is happening significance wise in terms of points of interest, right? What has price done? The current higher time frame range, which is what we just kind of, touched on. Premium discount. Where have we been, right? Price has basically ran out the highs and has basically retraced. So where are we headed? We could be headed to this fair value gap to end up going higher because nothing has changed in the narrative. And we could talk further about narrative and how to observe things when they change as far as bias is concerned, but that's beyond the scope of this video. So yeah, and then of course, like I said, intermarket relationships is also significant, which means, what has the S&P done in relation to the NASDAQ, in relation to the Dow, right? One little observation I want you to see here that would support this monthly fair value gap getting reached into would have to be this. Well, I'm gonna let you sit here and try to observe what you see that could potentially make price want to go lower. I'll give you a second to view it or just make some assumptions. Look at what you see at the highs between these three indices. If you said that the SMT was obvious, then you would have been correct. See, so that SMT promotes potentially price coming down into this little lower area, into this fair value gap to possibly go higher. So that's another observation, and also why, or highlighting why the intermarket relationships are so important, right? And then you can also observe, if one thing is pushing into a PD array, but another isn't, right? Like say, so if there was like a fair value gap, hypothetically, if NASDAQ was rallying higher and the Dow and the S&P reached into the fair value gap, but NASDAQ didn't, that's a form of SMT. That's a form of bullish SMT, right? I also think I discussed that in my previous video as well, which I'll leave a card for, so you can go check that out after you watch this one. But yeah, this element is very important. And so also, part of the intermarket relationship and fundamental analysis process, again, it has to do with the interest rate markets, has to do with commitment of traders, and it also has to do with seasonality. Okay, and each of those topics I can discuss in a later video. If you'd like to see that, or want to hear more in-depth conversation about those topics, definitely let me know in the comments. And if you've gotten value so far, make sure you like, comment, and subscribe. It definitely helps the channel out and keeps me motivated to keep pumping out these videos. And if there's any other topics you'd like me to discuss, definitely let me know in the comments as well. Again, we can discuss more fundamental analysis if that's something you guys would enjoy or be able to utilize. I'd be happy to do that. So moving along, so I hope the higher time frame made sense. In a nutshell, that's as simple as it can be, right? Identifying these specific liquidity pools: previous week's high, previous week's low, previous month's high, previous month's low, previous day's high, previous day's low. If you're trading on Mondays, you want to make sure you identify the previous Friday's high and low for Monday's trading, because it gets utilized like it did here, as well as here, right? It dug down, took out the previous 3 days lows, right? So you could see that being significant. You could see that in action. You can also see that actually played a role here as well. Friday's high, Friday's low, took out the last 3 days for Sunday's trading. So I mean, this is a beautiful example of why those levels are important. So yeah, I hope that has been driven home as far as the liquidity and all these specific topics here, right? So as we move along, we will now look at the 4-hour and 1-hour perspective. So each of these sections has their own significance, right? And specific things you want to look for in terms of, navigating from that higher time frame and those higher time frame levels to the lower time frames. For example, for power 3, to identify power 3 for the weekly chart, you're going to want to go on the 4-hour or 1-hour time frame and then map out Sunday's open price as well as Friday's close, because that will create your new week opening gap. For example, that would look something like this. So that right here would be your new week opening gap. And then anything above that, if we're bearish, would be good for sells, depending on, if the chart promotes that idea. The best buys would come from the opposite perspective, which would be below. And you would aim for, if you're trying to sell, you'd aim for a PD array that's above the Sunday's open price on the higher time frame to try to frame a reaction from it. Because again, like I said earlier in the video, the higher time frame levels promote the high probability quick reaction that many people try to look for. The higher time frame levels are so important in that manner. And then of course, you look for discount arrays below the Sunday's open price if you were looking for a bullish power 3, right? Keeping in mind what we just mapped out in terms of the previous week's high, previous week's low, previous month's high, previous month's lows, because if there's a bullish week, the previous week's high is likely to be taken out if it hasn't already. Because if you go to the weekly time frame, there's a weekly candle here. If there's a bullish week, it's going to likely create another bullish candle, which in turn would most likely take out previous week's high, right? And then the reverse is true for bearishness. If it was a previous week's low and the next candle is going to be, a bearish week, it's likely to attack that previous week's low on its way to whatever PD array or liquidity pool it's going to reach down to, right? So once you get to the 4 hour and 1 hour perspective, your higher time frame levels are transposed. Again, you would be looking for your premium and discount relative to that time frame. Find your equilibrium and the premium and discount levels, because you want to sell at a premium, you want to buy at a discount in terms of PD arrays and where you're at in price. Again, you want to ask yourself, where have we been and where are we headed, right? You want to also ask yourself, what's happening with institutional order flow? Is the 4 hour and 1 hour perspective in terms of delivery agreeing or negating the higher time frame that we just basically came off of, right? And again, you want to mark off your Sunday's open price to start observing weekly power 3 dynamics. And you also want to keep the liquidity that we've already discussed and marked off. You want to keep these in mind, because these are significant liquidity pools that price will reach for. It reaches for one or a few of these at any given moment or time period. So you don't have to randomly guess like, I don't know which low, which high. Well, here are the significant highs and lows that you should be considering, right? Another thing you want to keep in mind is the fact that, when you look at this chart, if it was a naked chart, what stands out to you? As you train yourself to observe liquidity in important levels, you can see how these equal lows here would be significant. Not only are they equal lows clearly on this perspective, it's also a previous week's low here. It's basically relative equal lows in the form of previous week's lows. So that's a large liquidity pool layered with a monthly fair value gap that we labeled out as well, right? And it's also a previous month's low, previous month's high. So I hope that makes sense, because again, if this is going to be a bearish weekly candle, this one was a bullish weekly candle, or an indecision candle, my bad, because it opened here, made a wick, right? And then it closed here. So it was like a small indecision candle, but bearish. It basically looked like this, right? And then a wick higher and then a wick lower. So again, this is the previous week's low. So if this candle was going to be like a bearish week, the wick created from the previous week here, right? Because say this is the body and this is the wick to this low. This previous week's low, if this is going to be a bearish candle, it's likely, hopefully going to get above Sunday's open like it did here, and then decline to reach down for the sell side, which is also layering premium and discount. In this instance, it's a discount, and we also have labeled out the discount array. So I hope that you can start to see how these little liquidity pools can help you navigate and start to anticipate specific liquidity pools that get attacked based on your top-down analysis and plotting of specific liquidity pools at any given moment, day or week, right? So yeah, basically, you want to do basically the same thing that we did. Where are your PD arrays? What's the range you're trading in? Well, we can see how liquidity was taken here. So on this time frame, the 4 hour, we could go from this low to that high, and that's our range. So anything above equilibrium from this low to that high, we're at a premium. So if we are going to sell into this fair value gap, it's ideal that, since we're above the Sunday's open price or close to it, we're also inside this range, right? We're above equilibrium. So if we were to retrace, it would make total sense, right? And it's Tuesday. So, this could also create the Tuesday high of the week to then push us lower. This low breaking doesn't change the entire narrative from the higher time frame, but in terms of near-term navigation, you can start to really see a clear picture if price was to want to decline. If it was to want to rally, what would be the potential weekly target? It could potentially be the previous week / previous or current month's high here. Don't overcomplicate it. If it doesn't make sense, or if you have questions, let me know in the comments, because I really want to drive these specific processes home, because I want to see y'all win. Yeah, so in a nutshell, that's pretty much what it would be for the from the monthly to the 4 hour. With our levels transposed. Again, we have previous days highs and lows. I don't want to mark off too many, because it's pretty self-explanatory. But you just, if you get like specific indicators, I also have some indicators if you want to check them out right here. Take a screenshot of those. You don't need all of them. All you need is, in my opinion, the ICT everything, the fractals, and a week and day separator. I think ICT everything has the week and day separator actually. I believe when we go to like the lower 1 minute-ish time frames, it'll let you basically see what day it is. It is very important, very helpful, consolidates your thinking, and just makes it a lot easier for you to focus on what's truly important as far as you trying to take entries. So I hope that's self-explanatory. There's things will always look a little different, but this is just like a basic template for you to keep in mind as you're looking at top-down analysis. It doesn't have to be super overly complicated, right? You having these specific liquidity pools, and I'm going to mention a couple more to add to your list. It's very important. It helps you know what you can be observing and looking for. Because that's the thing. Everyone's like, what do I aim for? Like, what liquidity pools get attacked, and how can I trust that they'll be consistent? Well, so far the liquidity pools that we've discussed are always present, right? And then as we go to the next stage, which is the 15-minute and below, you're going to see even more liquidity pools. And these are all constant. They're always there. And, as long as they are always there, you'll always have something to frame a setup on, potentially. Again, let's start marking out the rest of the liquidity pools, right? So higher time frame, you're looking for significant PD arrays. You're looking for these specific liquidity pools to have marked off. You're looking at the Sunday's open price and the previous Friday's close to create your new week opening gap. The 1 hour and a 15-minute are very similar in terms of what you're trying to apply in terms of liquidity. Because one thing I did forget to label here is the London's high and London's low. So previous week's high, previous week's low, previous month's high, previous month's low, previous day's high, previous day's low, previous Friday's high and low for Sunday and Monday's trading. And then also, of course, the new week opening gap, previous AM session and PM session highs and lows, because that's another near-term liquidity pool within these higher time frame ones that we discussed. So these are all just things to consider. So if you didn't write that list down, I want you to write that down right now and then go in and back test, how many times, one or a few of these have been utilized when price gets expansive towards one direction, towards a specific high or low, right? Because a lot of the lower time frame liquidity pools, like the new week opening gaps, the previous Friday highs and lows, the AM session high and low from the previous session, and even Asia's high and low, those are also important. I tend to use the London's high and low a lot, because before a previous day's high gets taken, for example, a lot of times the previous or the London session will be taken as well. So watch for an example. Let's make an example of basically what I just said. This is a good example here. So this is a previous day's high here. Previous day's highs, 2 previous days highs. So on this day, on Thursday, price, you see this blue little zone here? That's London's low. That's London's session. So London's low was attempted to be taken, but there was, some liquidity there from London that was taken, and then price rallied up to attack the previous day's highs, right? Also, London's high was here as well. It's inside that blue area, all right? So you can see how the London's high and London's low was utilized delivery-wise before it hit the previous day's highs, right? So in context, sometimes that's the most near-term liquidity, right? Previous week's high, previous week's low, previous month's high, previous month's low. Those are generally a little bit longer term. Like from the weekly perspective, it's a lot more near-term than the monthly perspective. Previous days' highs and lows are generally utilized on a daily basis in many cases, unless we're consolidating. London's high and London's low is generally intraday liquidity that gets targeted. And then, of course, previous AM session highs and lows, new week opening gaps, right, so on and so forth. Those are generally a lot of times near term as well. But as you're navigating in the AM session, for example, for indices, keep in mind London's high, London's low. In general, just all of these liquidity pools you want to keep in mind. But previous AM session highs and lows, London's highs and lows, previous days highs and lows, those are the most near term, and the previous 3 days highs and lows are also the most near term liquidity pools that you can start observing on a regular basis and really get some value from it in terms of targeting and just consistency in terms of targeting. All right. So I hope that this made sense. I tried to keep it as simple as possible and as applicable as possible. Again, you can see that this was not, in my opinion, overly complex, Wasn't too many moving things, just basically labeling out specific liquidity pools that could play a role of significance as you do your daily analysis, weekly analysis as well. All right, so yeah, if you got value from this video, definitely go check out the Power 3 video because you don't want to miss that. And yeah, if you guys have any questions, let me know in the comments, and I will see y'all on the next one.